Welcome to the Maryland Mortgage Rate Weekly Mortgage Market Update for the week of June 3rd, 2013. Hello, I'm John Thomas with Primary Residential Mortgage here to give you your update. Well, last week was not good news for mortgage rates again. They jumped higher on Tuesday. If you look at the bond chart on the screen, you can see the big red candle on Tuesday. That means bonds sold off over 100 basis points. Mortgage rates jumped about 0.25%. Now, if you look at the chart, May was when beginning of May 1st, when rates hit all-time record lows again. And since then, the bond has been selling off and home loan rates have been higher ever since. So it's about 0.75% higher since the beginning of May. And the trend is for rates to keep moving higher. If you look at the big red candle previous to Tuesday, that was the previous Wednesday, that's when the Fed said they may stop buying bonds. That spooked the bond market, sold off. And then we had the big sell-off on Tuesday. What was the big sell-off on Tuesday? That was capital banks around the world, so they're going to keep accommodative policy in effect, basically keep interest rates low around the world. That made the stock market rally, pulled money out of the bond market. Now we're trying to stabilize right here. We found a floor of support, so we are recommending floating your Delaware mortgage rate to start the week. But if we break below support, if we sell off again, we would quickly switch to a locking stance because that means rates are going to just keep jumping higher. We were actually stabilizing on Wednesday and Thursday, and then Friday had a bit of a sell-off because the consumer confidence reading came out better than expected. If you look at the chart on the screen, it came out at 76.2 for May 2013. That was a jump up from April, and that was the highest reading in 5 years. Now, consumer confidence is a measure of how optimistic or pessimistic consumers are about the economy. So consumers are much more optimistic about the economy than they've been in a while. So that's good news there. And then we had a reading on inflation, which was the personal consumption expenditure, or the PCE for short. That's the Fed's favorite reading on inflation. It came out very tame at 1.1%. That's well below the target of 2% that the Feds have for inflation. If inflation gets above 2%, they're probably going to have to cut back on the bond buying program. The bond buying program, or QE3, is what has been keeping mortgage interest rates so low. So if they stop that program, again, you're going to see rates jump up. But good news, inflation's low. In housing news, the Case-Shiller 20-city home price index, that jumped 10.9% year over year. That was the biggest gain in 7 years. So again, another statistic showing the housing market is on a recovery. We had home prices increase in 2012. We're up year to date 2013. So what does that mean for you? That means if you're thinking about buying, buy now. Get under contract. Home prices are going up. Interest rates are going up. The longer you wait, the more it's going to cost you. So if you're considering buying a home, get out there and purchase. Don't haggle over a couple $1,000s, because if you wait too long and the rate jumps up, even if you get it, you lost because your payment's going to be higher because of a higher rate. In the local news, the next free first-time homebuyer seminar in Towson, Maryland is on June 15th. That's a Saturday. That's from 10 a.m. to noon at the Sheraton Baltimore North Hotel on Delaney Road in Towson, Maryland. You can register for that by giving us a call at 410-412-3319 or register online, www.marylandhomebuyerseminars.com. Look forward to seeing you guys next week.